investors.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman here on this Monday, January the 9th. And quite exciting, actually, because we had a spectacular breakout on Friday. One of the reasons why we wanted to add to our long positions in the Dow and the 3 times long Dow positions is that there was this rectangle formation that was in a fairly narrow trading range when you think of the range going from the 34,712 high that was made on the 13th of December down to the low that was made on the 23rd or something, 22nd at 32,573. That was over 2,200 points in a very short period of time. And it kept trying to rally. But what I was talking about for a couple of days is that, actually for almost a week, is that the histogram, the 0% line of the MACD, was starting to turn up at the same time as the 9-period exponential moving average was improving, but not great. It was still pink, trying to go above the 14, but the stochastic was slowly rising. I was a little worried about the on-balance volume, but most importantly, the way that the market acts after the 8:30 economic news report on Friday. I'd say to subscribers, if there's any balance after 8:30, you've got to grab the 3 times long position. And the only reason why I was aggressive on the 3 times long, rather than just to get the diamonds, which we do own, that's the 1-to-1, is that I wanted to put a smaller position to work more aggressively because I want money for subscribers in other areas that are now starting for the first time to show that there is resiliency to the low that was made back in October. Total disbelief. October the 13th, 28,660. And as the MACD started to move up, I had a technique that I call, right here, let me show you. This is the reason why I always put the MACD, and I show this in when I, for subscribers, and also when I do my webinars, all-day webinar. The reason why I put the MACD over years and years and years that I've been using the MACD, decades, and the stochastic, slow stochastic, is that every once in a while, there's a push to the upside that has such a powerful move within just a couple of bars, especially when the MACD has already been moving up after a retest of the low with a nice divergence between price going lower, MACD going higher, and the stochastic higher, that it can give you a very quick move to peak A, to peak B, then to C. And then what happens is normally you get a little period of rest, a very short period, where the torque of the stochastic hands over to the momentum of the MACD. And it's almost like now it's gone into this higher gear. It doesn't have to use the same amount of power to keep going as long as the 9-period moving average, this is the 9 differential, the green line here, coincides with the 9-period moving average above the 14-period moving average. And that's exactly what we got, except it also went very quickly to D. Then it had a dip. The MACD, the moving average convergence divergence, the daily was still strong. Stochastic was nicely over 80%. On-balance volume was okay, not great. But your gray relative strength here was doing very nicely. So now we've got a move that went to a peak D, and then I said, okay, the vertical test from the 1st of December, 34,595 area, with using the 9 over the 14, I call it the 9-14 cross, and the MACD and the stochastic and the on-balance volume, when it had the retest with a higher high at 34,712 on the 13th of December, look, if just a visual picture right here says the MACD was weak, the stochastic was very weak, on-balance volume was good, it actually went to a higher high, but the 9 was getting real close to turning down below the 14. And that's the reason why we thought there'd be a pullback. Well, it went right to the 200-period moving average, tested it a few times, and now we've got a really strong move. And one of the things that I'm looking at here is that in the weekly chart, we've got a rectangle formation. So it could now take a little bit of time, we'll see, to work its way towards the previous high. And that says that if there are higher highs and higher lows, let's just go back to the daily because it's easier to see. Within that sharp pullback, there could be a rally to just under, right on, or just above the previous high, and then you've got to be careful. Well, this is already leg C. The MACD is only today crossed positive, so that could be early in the move. Stochastic's still actually quite weak at 51%. The unbalanced volume is okay. It's not great at all. The 9 has turned over the 14. Well, the day's young. I look at this as a daily bar, so I can only talk about it at 4 o'clock this afternoon, but so far it's good. That's suggesting to me this is still a very diverse market, and that in the context of daily, weekly, monthly charts, there's a lot that has to happen in January. It's a great start to January. But now let's go through these others, because if you're looking at the S&P, look at the work that has to be done in the S&P. It still hasn't even gotten to the 39.95 level of the 200-period exponential moving average. The low that was made at about 37 in the 3760s, that was 37, or was that 58? 37, I should type that in. 3764.49. I'll just type that in because I'm going to be referring to it very often. 7. Oh yeah, I forgot it already. 0.48. Oh, let me just double check it. I was busy talking at the same time, so it didn't register in the memory as it should. 3764.49. All right, so switch some numbers around. That's a 4 and that's a 9. Good. Okay. Well, that low is really important because it got retested umpteen times in this. Look at that narrow move there. Finally broke out, and we've got very good follow through today. The MACD's crossed positive. The 9 is still not yet positive. It needs another little bit, maybe another day of rallying. We'll see. Day is young. Anything can happen. MACD is, as I say, just crossed positive. Stochastic's only at 44%. On balance, volume is not great. So this is a very select move because look at the QQQ. Finally, the 9 went over the MACD crossed positive. Stochastic still only at 26%, and the on-balance volume is very weak. And look at the distance. Wow. Look at the distance between the pink 9-period moving average and the 14. So much work has to be done. So that means we have to go to the SMHs, the semiconductors. Now, that is a nice move. That's a nice move in the sense that it had a nice turnaround from the 200 level 2 days ago, and now it is at 218. That is, I mean, it was an 8% move in just days. As in an index, in a market vector semiconductor ETF, that is good. But there's a chance that we're going to make some form of resistance, strong resistance right here at the 220 level of the 200-period moving average. So within that context, I love the fact that you've now got some leadership, rotational leadership. That's really important. Within that context, now let's go to some of the other areas. If you're looking at the IWM, this is now a leg C to the upside. There's a lot of work. The weekly chart is actually starting to make these cluster formations that take time, and then it pulls back in price. This will be the first time that if it breaks this green this green inside track resistance level, I'll redraw it. I'll be back in a moment. Basil Chapman, Tiger Conditions Hour. Dow's up 133.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open. to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
We're back. So we're looking at the IWM. And the IWM, I have to put, even though technically it's not everything's there, I have to put an up arrow because it's already in leg C. And that suggests it's in a buy signal. And when I do that with an up arrow on the way up, on the way down, it's a little different. I start off with a sell signal, then it gets upgraded or downgraded, let's call it, to a sell mode. In this case, it's a sell mode because the price in leg C is so sharp. The MACD has turned up, but I have to wait a day or so to see if the 9 is going to cross the 14. But what I was saying is this Chapman Wave Inside Track repellent zone says that if there's a move in the IWM, they can take it to you got 184 as the 200 period exponential moving average. Look at the repellent it's been all the way since it made the high in November. It couldn't hold it every time. The reason why I'm looking at the market at this particular point way more positively than I have for a long time is that I think we're looking at the right side of the market at this particular point after the most recent lows have been made as acting a little bit differently to the way down this previous move down. The way down recently looks more like emotional selling. It kept trying to rally and it got knocked down. At this particular point, there's enough evidence with the MACD in the weekly chart of the IWM, the Russell 2000 ETF, to say it could try in this move in January to get to the 181 and then 186 level would be the upside targets, but only if any time in the next 6 or 7 sessions it does not close under 175. That's the way I'm looking at it. Monthly chart is still very ugly. Now I want you to spend just a moment on the gold. Gold is very strong. You'll see, look, the 9 has been positive since it crossed positive right there on the 8th of November between 1681 and 1735. And since then, it's been holding the 9. It held that 200 period moving average as support for quite some time. Now it's broken away from it. And it says at this particular point on the shorter term, shall I call it shorter to near term? Because I am talking about 2-3 weeks. Yeah, short to near term. we're looking at this entire 1832 to 1790 level as very strong support. If at any time in January, gold continuous contract starts to trade under 1788, you're looking at something very different. It says that, yes, it was a fabulous move, and now it has to rebuild strength to go high. At this particular point, with the gold stocks that I looked at over the weekend, with the little babies that are starting to move, like an NG Nova Gold, going from the 4 level to 671 today, and LXC pulling back a little bit. If you look at the ASA, which is one that I always use for years and years, as just a benchmark. I'm originally from South Africa, so there's an ASA, is a gold and precious metals. I think they have 5 stocks that already are like a core, as if it was one unit, like a fund. So that's acting very nicely. It's gone right to left side, right side price time match that I had drawn in and discussed. I didn't use I had to use a different low for it. So that goes to, so it's in a shorter time frame. So the level I was looking at, in ASA, which is trading at 1572, up 8 cents today, was 1593. The high that was made August the 12th. Today's high is 1585. So there it is, less than 10 cents away from hitting that level. It's in leg D. The last time it went to D, it pulled back. It went to E and F and then pulled back. Then it had another one from the low that was made back in September, around about 12, just under 12. It went to a peak D, held back, and then it had a peak gray A. And I made that an E, potential E/B, but the stochastic had pulled back quite sharply from over 80%. That always makes me a little nervous and says, watch out, you can have a little bit of a pullback here, which it did. It took time, not much in price. And then it started a brand new buy, and it went to peak ABC. Now it's in leg D, just above the 200-period moving average. So a lot of this says that on a very short-term basis, gold could pull back, but my suspicion at this particular point, based on all the tech, look at the way the MACD and stochastic in the weekly chart is still strengthening. The histogram is actually expanding, even though it's leg D, and that's a buy mode going to a D. So all I can say is that within the context of gold and silver, the context I was trying to put it in was to say silver had a way better chart for so long. Then what happens to the way I look at gold and silver? I'm looking at it just on chart patterns for forever. And I always see that silver lags, and all of a sudden, silver starts to act very well. And it actually can occur when gold is kind of idling along, not doing very much, and then silver leads and gets a better chart pattern in the shorter time frame, not always in the longer time frame. And then finally gold says, oh, wait a minute, whoa, and it starts to catch up. As gold catches up and starts to lead just briefly, silver takes a breather. It doesn't have to collapse. I'm just saying takes a breather, and gold plays the catch up, and then it gets a little tight, and they both take a rest. And I'm looking at that and I'm saying, how could they take a rest if it's not more than just a brief rest when the dollar is making a new low as we speak from the high that was made in September at 114.78. It's now at 103.16. You got a left side, right side price time match that says that's bar symmetry that goes to the high of the week of the 30th of September. That says the week of the 27th of January, there's a chance that the dollar is testing the 101s. It's at 103.15 right now. This is a leg F. Look how quickly you're making little troughs on the bottom here. Usually that says, if it doesn't, that this could turn out to be a Chapman wave instant restart on the way down. So we could get E going to a leg F/B, lowercase F/B in the dollar. Then there's a little bit of a bounce. And then over the period of, it doesn't have to be exactly this time frame, but I'm saying over a period of a couple of weeks, it looks to me like it doesn't really match. Let me just do this again, if you don't mind. Was that the low? That is the low right there. Ah, there it is. Okay. So let me just see if this does match. I think it was 1 bar off, but that's just visually. Here we go. Right there to there. Yeah, that's it. My eye said it was 1 bar off. and there it is. So that takes you to the beginning of February. That makes more sense. So we choppity. You don't have to have sudden huge gaps to the downside. It's just a steady lower highs and lower lows in the dollar index. And that's the reason why gold is moving very steadily to the upside. And it says by the week of February the 3rd, there could be a test of the one. It could happen earlier because you've got your Chapman wave inside. Now I have to change it a little bit. Chapman wave inside wedge target support line. And what I do with this is when it looks very obvious that you're just breaking underneath it, it says you can move it down to the next level. After all, you want to use whatever is visually appropriate. In this case, it's appropriate, I think, to move this target line down a little bit. So that's the dollar. I'll be back in a moment. Down's up 136, S&P's up 32. Very selective move. We are trying to buy this dip. We'll see in certain seconds. I'll be right back. Basil Chapman, Tiger Ignitions Hour.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Hi, folks. Yeah, so just let me show you the 1-minute chart of the E-mini. Went from a trough, went to a peak. Do you remember peak D? And the Chapman wave is very important. I should do this because we always have use and you people listening to TFNN. So in the Chapman wave, we try to identify the lowest low bar. Each successively higher peak is alphabetized sequentially, uppercase on the way up, A, B, C, D, E, F, G. It's at D, the 4th highest peak that other things can happen. On the way down, it's lowercase. It's the same thing. You remember we just had an instant restart, a possible one in the dollar. But in the meantime, at a peak D, it could have you can see the gray line, dashed line, can have a much sharper move to the downside, or it could recycle, and if within 3 bars it goes to a new high, that is after peak D, a new leg up, 1 penny above that peak D, it says that could be counted as E/A, F/B, G/C, and usually if you get to the G/C, it pulls back and goes to the D. So 4th highest peak is really important. It's almost like in music where you get your quadrant, and you get your octaves. Well, in the meantime, here we've got the 9-period moving average was so strong, yet look at the MACD, how it pulled back. If you use one indicator, you can get really stuck. Look, you'd say, oh my God, get out. Meantime, it goes to higher highs. But look what it does. It goes to higher highs, constantly coming back to that peak D pullback for the trough right here. And that says just keep counting the alphabet sequentially. Yes, this could be G/C. You can put it in as G/C. But most importantly, what we are looking at is there's kind of a sideways move after this big spike up. And this is going to be the 10:20 to 11 o'clock time frame is where you start to see, has all the work been done? Overnight Sunday, I had a Chapman wave high trend gauge reading, which said the E-mini should have a sharp rally in the next 1 to 2 sessions. It's already done that. Very often, if it does it overnight, it also does it during the day. That's kind of what we anticipated. And now what we're looking at is within the and there's the 10-minute chart. Look here. 10-minute chart. Has this recycled? Is this not a G, a peak G, or is it a G/B? Wow, from the actual 9-period over the 9-14 cross, the MACD and stochastic at 85%. This really looks like the 10-minute chart is going to go to a leg C and then a D over the period of the next hour or two. So this is very good. This is the action we wanted to see. At the same time, there are some stocks that we are looking, or in the sectors that we are looking at, that are kind of overbought, and I'd love to have them pull back because they're showing leadership. I'd like to get them. Look at the euro dollar. There's a peak E, and it's held very nicely. You see the vertical test of the technicals at that peak at about the 13th or so of December. And then again, just 7 days ago. Look at that. And you did get your pullback, but look at the way it's gone quickly to the upside. And look, the 9, I wanted to say that over here. Look, if you use one indicator, you can get stuck. But if you know which indicators to use in sequence, look what happens. That 9, even though the MACD was pulling back, the stochastic was sharply lower, that 9 kept you in the trade right to there, and now it's gone back to L. So it went to S, pulls back a little, finally goes up, and that's all. And here we are. This is that extension in that 10-minute chart. It didn't even make a peak. This is still, remember, you can only call it a peak when it has a lower high. That is not the case here. This is still a floating net at G/B. So I love this. The reason why I want to be building up a good, strong position in the Dow is because the Dow has been the leader, even if I'm seeing it as potentially now a little bit weaker as the others play catch up, not the issue. The whole idea of this deep cyclicals moving higher, it's beyond fathom how you can consider this to be a major recessionary indicator at this particular stage. It could say, yeah, you could have, finally we could be calling it a recession because of 2 quarters of weak results, but you can't do that and ignore everything else. And the thing to not ignore is that, so this is the this is the yen, US dollar, Japanese yen currency pair, made a peak F, sharp pullback in the monthly, peak E, sharp pullback. There's your left side, right side, price, time match, but I didn't do it to the high that was made. I used a particular candle, and it did it within, it was 1 week. No, it did it to the, 1 week late. Last week it dipped underneath the low that we were using as a benchmark, which is 130.41. That was the week of 5th of August. Now I want you to show you something else that's interesting. Look at high-grade copper. This is really, that's why I'm saying I don't think the assessments are correct. Why would high-grade copper be so strong in the daily and weekly charts? Monthly chart is improving. That's not the issue. It's the daily and weekly that are so strong. When we're just about to have an announcement of a recession, it doesn't make sense. And the other thing is that the announcement of a recession usually comes just at the moment where everything's starting to look very positive technically. So all I'm saying is, yes, there are a lot of things out there that are very negative, but high-grade copper moving like this, wood is the iShares Global Timber and Forestry ETF, also acting quite well, not great, But this is international stuff. Look at the EEM. The EEM had a big breakout. Oh, I forgot to notate this. Leg C in the weekly chart. Monthly looks terrible. But it's really important that we're getting the... Remember, I've spoken about rotation for a long time. And the reason I spoke about it is I always think of it... I grew up as a preteen right on the water's edge. So I've always looked at the ocean, and I appreciate the ocean a lot since I'm not a very good swimmer. And there are a couple of times where it's almost been kaput for me in the water. But at the same time, I love the water. I love the ocean. I don't like the cold of the water, so I never really surfed or anything like that. I did body surf, but that's different. Now, what we're looking at here is, if you're looking at the underlying, look at the way all the bad news about emerging markets, etc., and look at the low that was made in the 3250, was it? 3350, so 3349 level. The week of the 28th of October, we've got a strong peak E, A, it moves up to a strong leg B, makes a peak B, and then as it pulls back, it goes L, where the 9 goes over the 14, and here we are actually at the levels we were at back in August when everything was just deteriorating and looking horrible. So this is the emerging markets. I'm not talking about the monthly chart. It still looks terrible. But finally, the daily chart has gone to the level that says that 200-period moving average, which was like out of sight for so long. Look at this, scrolling back. The last time it actually touched the 200-period moving average, I'm going back. Yeah, it missed it even there, but it went within fractions back in September the 7th at 53.58. Nope, I'm looking for where it touched it. There it is. It gapped down. Often that's the gap line, like ice. So it gaps down. On the 2nd, it's trading at 54.78. The next day, it gaps down, it's trading at 53.62. And that's it. Goodbye. That was the last time it touched. That was, what did I say, the 2nd of July? 2nd of July? Yeah, 2nd of July. Happy birthday, family member. So look at this. It comes all the way down, and it hasn't gotten close until right here. It gets to, in December, it tries to get to the 39s, 38, 39 level, pulls back, and finally today it touches it for the first time. I can't ignore that. I like what I'm seeing, I must say. Yes, there's going to be bad news at some point that comes out, but wow, if you can get these things rallying, the EEM, the FXI, look at the FXI. This is China. Finally, I can say, I've been saying for a little while that China is improving and that you can't read the news because there are two markets here. One is the news market. There is way above the 200-period moving average.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Let me just go through this. A couple of questions. THR, which is Thermon Group Holdings, Flow Assurance, Process Heating, Temperature Maintenance, Freeze Protection, Environmental Monitoring Solutions. Trading leg D, finally, in the took a long time to get there. In the monthly chart, leg C in the daily chart, and leg D in the. So that was leg C in the weekly chart, leg D in the monthly chart. Oh my God, leg D in the daily chart. In this beautiful cup formation, left side, right side, price time match. It went right to the edge on Friday. The high that was made back on, I think it was November 29th. Yeah, November 29th at 28.89. That was a target, left side, right side target with an inside wedge resistance line, and it hit it exactly on Friday. The high on Friday was 29.85. I said exactly. I'm sorry, it's not right. It missed it by 4 cents, but today it broke out. Yes, that's really good. And this is all telling me that there are other areas within the economy that quietly have been doing very well. So I'm not suggesting that it's just this is the all clear, this is the big move that takes in 2023, we go to all-time highs. What I'm saying is there's been a significant improvement over the last many weeks in various sectors. Some had to retest, but the October lows, even if you go to the SMHs, the semiconductors, the October low, that was at 166.97. We are trading at 219. 50 points. That's serious stuff. That's 20%. That's a really good rally. Going to the 200-period moving average. Not saying everything's out of the woods, but it is really important that I see that going on. Now let's go back to what we were looking at before. We had shown you crude oil. The crude oil is trying to rally strongly. It was up at $2 something. Now it's up at $1.70, 75, 76. It just keeps being beaten down the last few days at the 9-period moving average. So this is still in a big consolidation. But wait a minute. I wanted to give natural gas today as a buy with the UNG. Actually, I was going to do that Friday. The reason why I didn't is there are other things that I want to buy that have better projections. Yes, there would have been a very nice pop. If I don't think we would have got it because I wouldn't have said to buy it. Look, UNG closed Friday at 8. Oh, I'm looking, sorry, UNG. Closed Friday at 12 something. What was it, 12? There it is. 11.89. It did hit 12.21 at 11.89. And today, see two doji candles, but a specific tiny doji candle on Friday. I love that, especially when you're getting a potential V-shaped pattern in the on-balance volume. But I would not have said today, with a close of 11.89, today's low is the open was 12.32. So we almost certainly would have missed it because I wouldn't have paid up as much as that. But look at this. This is a nice move. And it did that. The reason why I looked at it so closely, and I was looking at it all week, you remember? Because of the symmetry, the bar symmetry from the week of the 27th of December at 1169. This is a continuous contract. Is it still that number? That always changes. Yep, 1169. Spiked to this crazy double top. One of the most unusual, where I had no choice but to count that as a B minus because it broke down. Very unusual to see that in the Chapman methodology. For all of those who use it, you know that that's really unusual to go to a high above the previous high, and that's way above the starting point of the previous low, because then that has to be counted as a new move to the upside and then fail. And it did a beautiful price time match from the left side to the right side, broke down, did it again, and now it's done the huge one from the 27th of December to last week's low of 1162. 1169 was that low. So we're going to be watching this very closely, because this could be the start of a decent bounce. I mean, percentage-wise, 13 to 16, wow, that's really nice. But I'm trying to find some things for my subscribers to my opening call that has the potential to fit into the category that says, if these stocks or these sectors are working now as well as they were a month ago and as well as they were 2 months ago, or even better, that just says that they've made a turn that is much more significant. They're already a mature buy. So that's what we're looking at. EQT, so EQT, well, the question was, could EQT give me another 15 cents? I don't remember where it was from. And my answer was natural gas and hydrocarbon, EQT core, trading at 35.14, up $1.80. Yeah, because if natural gas is turning around right here, even if it's just a bounce, that's going to help this. And I say the 35 to 36s would be a target for me on the very near term. Next question came in was, whoops, where was it? Yeah, I'm not sure. FULC. I don't think I've ever looked at FULC. FULC. And that's called Fulcrum Therapeutics. Huge move up. Yes, up $1.07 today, up 11.5% at 10.38, way above the 200-period exponential moving. Yeah, these microbiotechs, I call them micro only in the sense that they are just funding-wise and in every other aspects. They're in the infancy, even if they've been around for years and years and years. In price and everything else, they're in the infancy because they're waiting for huge product approvals. And in this case, A, B, leg C, to ups, A, B, C fails, still holds the low. So this is A, B, C. This is already leg D in the daily. It's acting very well. The big issue here for me on the visual basis is a close. It's done one close. No, it hasn't. The high of 952 the week of the 16th of September. Last week's high was 937 was the close. Oh. 937. So this is a very important week on a closing basis. I want to see over the rectangle formation right there. I want to see a decent close, and I usually say preferably 2 out of 3 weeks you want to see a close over the arch high, and that's, whoops, that is this one right. I'm going to make this a little higher for the moment, this rectangle formation, and that is that high. So yes, it's acting really well. I don't know what they do, but so many of these therapeutic companies are doing well. RIG, question about RIG. Yeah, the one we had, we missed it. Now look at a spectacular move. Just in 4 days, it's gone from the 410-ish, 418 level to 526. That is a beautiful move. Leg C in the weekly chart, and trying to tackle the left side high of peak D back on March of this year, last year, at 556. It's almost there. This is a fabulous move. And that's one of the reasons why over the weekend I was saying this is a sector that's been acting extremely well. And that's just telling us that, in a sense, there is demand, especially if China comes back on strong. There's going to be demand for oil. So the price of oil itself might be pulling back, but the rigs, etc., there's something else going on that's quite different. So I'm looking at that as a potential in the, let me just see, is that OSX service? No, OIH. So the OIH is acting very well. That's the Van Eck Oil Services ETF, leg D, at 314.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Yeah, so the OIH is trading at 314. It is 318.58 a little earlier on. So maybe it's just getting a little, starting to bump into some resistance. But these stocks, like a rig, like an SLB, Schlumberger, this is in the service area. This is, look, always identify from an obvious low. In this case, that's the low, right? You don't have to have any questions about that. And then you go peak A, simple technique A, B, C, and it's in leg D, just above the previous high that was at a peak E back in November. So Schlumberger is doing well. And this has just started its leg D in the weekly chart. Most importantly, look what happened in the monthly chart. Is this a brand new, I think it is, a brand new G/C. It's actually looking more like a C, but I always have to be very careful. When you're coming up, you're just walking the 9-period moving average. So look at this, G/C in the monthly chart for Schlumberger. Very, very nice. Okay, a couple of quick questions came in, and the questions I have to answer quickly. One is, let me just slide this over here. Yeah, so the euro was a question on the EUR/USD. There it is, euro pair. Yes, I'm calling this an E for now because we made a lower low. So if it takes out that E, then I have to go back and I have to see, can I use alternate counts? Well, Is this going to be a brand new F/A? If it's A, it's really positive. If it's F, it says just be a little careful. You're bumping into resistance. So I haven't got any. I don't have time to do any work on it now. But the coming off this low says that let's see if it gets above that left side high. So I'll deal with it. Maybe tomorrow we'll take a little time on that. Next question came in. That was, let's see. Yeah, on a very near-term basis. Remember, we had so much selling pressure. I'd just be a little careful. If you're shorting, make it a real quick one. So I want you to take just a moment to say, look, the 1 minute chart is walking the 9-period exponential moving average right here. It's getting a little bit toppy, but 9 is still way over the 14. That's why you've got to be a little careful. If you're going to short, make sure that it crosses negative to confirm that at this particular point.